Let's talk about channels for a minute. Here we've got an upward trend, and as we discussed previously, we can draw a support line which represents a diagonal which is kind of guiding the price, and the price keeps bouncing off it in its journey to the top. Now, what we're going to do is we're going to take this diagonal and we're going to copy it and we're going to put it above the price. So there it is. It's got the same angle as the first one, and it's sitting on one of the highs of the price. So once again, as you can see here, the price is also bouncing off this diagonal as well, and bouncing downwards. The price is kind of moving in a channel or corridor. Now, what are we anticipating from the price going forward? Well, right now we are probably expecting for the price to bounce off the top border and then to go back up. This is where we would enter into a buy order. So once the price has bounced off, we would wait for it to hit this bottom border of the channel. We would enter into a buy order, and if the price goes in our direction, once it hits the top border again, that's when we would close our trade. So it's important to note here that in an upward channel, it is recommended to trade only buy orders. And why is that? Well, let's take a few steps back for a second. At this stage, we're anticipating for the price to go down. So we could technically conduct a sell order, but it's not advisable for two reasons. First of all, we'd be trading against the trend, and that's something we said we shouldn't do. We should always trade with the trend. And second, as you can see here, the downward movement is actually smaller than the upward movement. So in an upward channel, if you create sell orders, you will always earn less than if you create buy orders. So that's another reason why in an upward channel you should only trade buy orders. Next, we're going to look at a downward channel. So here we've got a downward trend. We can draw a resistance line. If we copy that line, we can see that very often the price will also follow the copied line. So it won't break through it, it will bounce off that line. And channels are very common on the Forex market, and you'll see this from our live trading on a real account further down in this course. So here we're expecting the price to go up, then we'll conduct a sell order, and we'll close our order once the price reaches the opposite side of the channel. So once again, in a downward channel, it is advised to open sell orders, because you would be, in this case, you'll be trading with the trend and you will get longer movements. And so those are the two main ways of trading channels. It's actually one way, but in two different types of channels. And it's always trading inside the channel. And more often than not, the price does stay in the channel. But sooner or later, of course, the price will break the channel. And that's why there's an alternative strategy where, in this case, instead of opening a sell order, you would open a buy order, and you would expect the price to go somewhere out of the channel. You would use this strategy when your other analysis is telling you that this channel is getting too old and the price is going to break through it. So when the channel is quite new, there's more chances that the price will stay inside. When the channel has been around for a while, the chances of the price breaking out are constantly growing. Both strategies are valid. Depends on the situation and what your other technical analysis tells you. So to sum up with channels, direction, trade with the channel, stay inside the channel. It's more likely that the price will bounce into the channel. There's an alternative strategy, which is a breakthrough strategy, and that is used when you expect the price to break free from the channel.
Alright, so that was channels. Did you enjoy this tutorial? Well, if you did, then you might want to check out the full course. And the good news is that I've prepared an exclusive discount for those who have seen this preview. Just check out the link in the description of this video and you can get the full course with a massive discount. I look forward to seeing you in the course, and until then, happy trading.
Hi, this is Imran from iTradeAims.com. I see a lot of people tell me it is difficult for them to read the Elliott wave using AO. I find it hard to believe. So here I am. I'd like to show this to you within a minute. There is nothing to it. All you have to do is to keep your eyes on this place here. See what happens around this dot. These few bars around this area. When price crosses over, AO crosses over, price is on the other side of alligator, breaking Ames levels, coming down, comes here, creates a peak. That is your possible third wave. Now it could be wrong, it could be something else, but at that given moment, the best information you have is that you have a peak of AO, and when AO peaks, you have a third wave, possibly. It's an impulse wave. It could turn into a different wave. If it extends and goes bigger, it could be a third wave. If it doesn't go too much, later we'll find out that it was just a one wave and all that. So if we were here around this area and we started looking, that price broke out of Ames, the first fractal out of the alligator's mouth, and it started going up, we started assuming that we are, because the alligator's mouth was open, so we thought, okay, and it was okay to think that we were an impulse wave. But soon we found out that that impulse wave had to be cut down. It stopped. So if you were long here, you'll get stopped here, the dot is here, right? Not many people will go short immediately here, but if you did, it was interesting. Then one could have gone short here. It's not the best place, but you could have. It's an open alligator. It's a setup 2. It's an open alligator. This is setup 1 because alligator is sleeping, and it's the first fractal out of the sleeping alligator. But this one is kind of a reversal, and this is the first fractal out of that when the alligator is opening. And remember, these are lines shifted into the future. I check them like this. Put your cross here, here. For example, at the end of this candle, I want to find out, if I want to find out where the blue line would have been, I'd go wherever I would match this 8 bars to the future, 5 bars to the future for red, 3 bars to the future for green, and this is where alligator would have been. It would be almost kind of open, but around here, alligator was properly open. So counting alligator wave is all to do with AO. Alligator tells you, it makes it even further easy. You don't have to count. Alligator tells you when the alligator's mouth is open, you're an impulse wave. An impulse wave is either 1, 3, or 5. It could be anything. So when alligator opens its mouth, you're an impulse wave. Get on with it. Okay, so you would have gone here, entered here, maybe exited here, re-entered here, or maybe not, because the red dot was, when the red dot came, it had already broken Ames. Had the red dot come around here or here, had it appeared here or here, that would be better. But anyway, sometimes it happens like this. I would have gone short. Had I been looking at charts, I would have gone short here. And now look at this. When price creates a new low, which is lower than the previous low here, and here, around about here, is where AO peaked previously, then it retraced up, and then it came down. This time AO diverged, because look at this peak and look at this peak. This is it. That's it. Around this area you'll have your 1, 2. I don't pay too much attention to 1, 2 on my M1, but sometimes it's clear, you know, like 1, 2. Yeah, it makes too many 1, 2s here and there. But I kind of look. There might be 1, 2s around here as well. You see, this 1, 2. It could be, but I'm not interested in those ones. Those are against trend. So I don't look at 1, 2s in the opposite direction at the peak of AO. I want to look at 1, 2 around here, around these areas. And if I start my campaign here, and it peaks here and starts to lose momentum, I'll be out. And then I will try to make another entry, and when it diverges and starts to lose momentum, I'll be out again. Now this is 1, 2, let's say 1, 2, 3, 4, 5, or one could say this is actually 1, 2, because this is where the 0 line is. So this would be right to say this is 1, 2, 3, 4, 5. What happens after this? price is going to sideways. It's going to go sideways. It's going to turn green, and it does. Let me forward this, and guess what it does? Now some people might have been trying this. In fact, even I would have tried it. Yeah, why not? Because if this was 1, 2, 3, 4, 5, this could have been the 1, 2, 3, 4, 5 of the third wave. But here, it did set up. I have a red dot. I would go short, but I would be taken out immediately. And then if I scroll a bit further, you see that you have a new setup. Now this setup here, in this zone, is the open alligator. Now we don't have the alligator to the right. We need to be 8 bars there on the right. And in the live charts, we probably won't be seeing this candle, but we'll be seeing the alligator going forward. So let me just forward this. Around this area, or around this particular candle, my alligator would have been around here, around these 3 lines. This would be a nice open alligator. I'll put my pending around here, and I'll be long. Now, this gives me an idea here that I might have finished some sort of impulse wave. I could have exited. Well, I would have definitely exited the red dot or the break of aims, and I'll wait for another setup, possibly a 5th wave. There's a blue dot. There's a blue dot. This could have been taken. There's a blue dot, but at the time of this blue dot, when it appeared, you wouldn't have taken anything because there would be no aims level. But at the end of this candle, you will have aims level, and then you'll go long here again. And guess what's happening? It is happening a divergence again. So this is 3, this is some sort of 4, and this is 5 because it diverges. That's it. Simple as that. Thank you for watching.